discussion post. For this particular project, I'll be focusing on how data mining can be applied in house prices and using cluster and regression analysis to determine the prices based on population. So I'll first off start by introducing the topic. Now, the interest in consumer behavior has enabled businesses to gain competitive advantage in their respective industry by using data mining, from what customers are buying to when they are buying it and where and the season they are buying it. That said, the real estate market has benefited from using data mining for consumer behavior, as well as finding the patterns and trend the housing marketing prices. So that said, there has been a significant market shift with the real estate industry over the years. Areas that were highly populated, mostly urban areas and cities, are seeing a shift whereby more people are now moving into the suburban areas and less densely populated areas. Looking at the housing price dataset and population census dataset for Kansas City, we can derive a housing price pattern based on the population. So the focus here is the house marketing being affected by the population of the area. First off, I started by a couple of data wrangling processes. So my data was in different formats. So I started by converting my house price data set to from API to CSV file for me to be able to merge it and clean it with the other population census dataset. So I used a conversion tool for that. I then followed the data wrangling process by cleaning the dataset. Now my dataset did not contain any null value, but it did have unnecessary columns that I didn't feel the need to use them. So I ran data cleaning by dropping some of the columns in both the population census dataset and the house prices dataset. Finally, I decided to use concat for my merging process, and I decided to use this method because it allows me to combine two or more datasets horizontally without necessarily losing some of the indexes and variables that I was trying to work with. So the output of that resulted into a table whereby we have the merged data set from ID to the square living 15 is the first data set, that is the house price data set, and from geo ID county to male, that is the population census data set. So after that, I began conducting analysis process, and the first analysis process was running a regression analysis. Now, regression analysis are usually used to identify a relationship between a dependent variable and an independent variable. So for this case, I was trying to look into how the location of an area affects the price. And running the following code below, I was able to identify that areas between these coordinates, that is 74.8 to negative 74.4, is recording a low number of house prices. So houses around this area tend to be in the range of 0.5 to 1 million. And from that, we can deduce that these are areas where they are populated. So as said, from the visualization in the previous slide, we can infer from the chart that presents a linear growth in the house prices against location. And we saw that areas between minus 74.8 to areas where the coordinates were minus 74.2, the house prices was low, which could mean that most of the house purchases happening in this location is low. And from so with the second chart, I performed a cluster analysis where I was trying to look at similar groups, because cluster analysis technique guides you into finding areas or clusters that present similar groups. And from this chart, we can identify that the population group and price group tends to concentrate around this area, whereby the group with population between 0 to 4,000 and is seen to have a lower house marketing price of around 0.5 to 1 million. So as areas that, or the groups that have a high population of 8,000 around this area to 14,000 tend to record house prices that are of 3 million and above. Or finish off the project, I'll be talking a little about parallel computing. Parallel computing is very important, especially when you're dealing with complex and large data sets. I was able to see the importance of parallel computing when we were dealing with that assignment a couple of weeks ago. It is highly scalable. Also, distributed computing combined with parallel processing enables the business to gain intelligence into applied big data analytics. However, I did not feel the need to use parallel computing for my particular project. However, for future projects and analysis, I do plan to imply or use parallel computing. So in conclusion, the model was able to answer the research question of whether population does affect pricing. And moving forward, investors, home buyers, and the real estate market in general can use this model to make informed and better decisions. Thank you.